Good morning, and thank you for joining us once again for our earnings call to announce the results of quarter two 2024. I have here with me Andrea Stein, our newest addition to the company, and Bernardo Bezerra, my longtime friend. We have come to the half of the year with an EBITDA of 63 million reais, 22% up compared to the first half of 2023 due to the company's capacity compared to last year, but still below what was planned, which together with projections for the second half of the year, the price projections and resource projections led us to adjust our guidance for the year, which is 5% down. And the important takeaway is that despite this change and the results of the first half being below what was expected, we have seen consistent results despite the less favorable period we had in 23-24. If we combine the guidance that we provided in 2023-24, 3.5 million in combined EBITDA, and with the new guidance of 2023 combined with the results from last year, which were above our guidance, we will continue to have another 2-year period with very consistent results, very much in line with our business plan. Nevertheless, and always looking forward to the future, we will continue to be focused and very diligently focused on initiatives that could improve the future results and the operating assets of the company. This is something we have been doing for 2 years now, but it's practically an obsession of ours to look for margin increments in the long term for our operating assets so that they can continue to be profitable consistently and robustly profitable in the long term. So in 2024, today, we have closed new offset agreements for our current operating assets, adding up to 3.1 million reais in revenues. And if we if we look at this element from a half full glass perspective, these initiatives will have a good impact on the long-term profitability of the company and create additional value to the company looking forward, which if they have empty glass perspective, this creates an important security margin, which could offset 4 years with lower natural resources, just like we saw in 23-24. There was a year of losses, but we were still able to deliver results above the forecast for the year. In quarter two, we also closed a very relevant operation, a very relevant deal to supply operation in Suruá. And this is a relevant milestone, which could be the first step to many other deals in the future as the top mind supplier of energy to high performance computing and artificial intelligence clients. We have been holding a lot of conversations in Brazil and in the US with technology clients, and we believe that in both countries, in Brazil and in the US, we will have good opportunities in the future. This industry, which will certainly have an exponential increase in its energy consumption in the upcoming years. Also, in the US, we advanced to hold a minor stake in Goodnight. We believe that in the second half of this year, not just with this new investor joining us, but also with the launch of Una 2, we'll have great chances ahead. And finally, we will continue our positive trajectory for our financing plan. We had a decrease in the company's leverage quarter over quarter, comparing quarter two with quarter one. And we have started to assess the possibility, considering that we already have a long-term dollar-based revenue and this should increase in the next years, we are starting to look at the possibility of increasing our dollar-based financing, leading to nominal gains in terms of reducing our financial expenses. We will talk more about this later. So the first half was below plan due to low resources. Resources were 10% lower in general. Also, some delays in our projects. Our projects are ready, but there have been some delays, and there was an impact of about 23 million reais in the first half. The short-term energy price is lower in the US. It's important to highlight that it's that it's short-term, because we have very good prospects for the long term, but in the short term, due to milder temperatures in Texas, prices are lower in the US. And finally, the net operating efficiency, there was an impact of 7 million reais in the first quarter with a good technical performance and energy conversion in our wind systems, which was very good in the period. We continue with our services contracts. So we're very protected in this front in terms of availability. But we had this 7 million net impact on our operating efficiency for the period. The energy platform had the best first half of its history, and 28 million reais lower in quarter two than in quarter one, which also created, well, in the first half, in the first quarter, the production level was below that of quarter two, but since the platform generated a lot of results and the prices of the assets in quarter one had a higher price, this led to a higher EBITDA than in quarter two. And in quarter two, we produced more, 18% more. However, the unit price was lower due to the platform and the assets generating less of the high prices items. So we had a quarter two below quarter one, but combining the results, we reached the 703 million reais that I mentioned previously. It's always good to go back to the theme of resources. Bahia and Delta, our major sites in the Northeast, have undergone years with winds below the historical average. This can be clearly seen on the chart here. From 2012 to 17, we had winds much above the historical average. And then in 2016, we had our IPO. And after that, we have seen lower winds or weaker winds. But difficulty is what motivates us to improve. So this is what led us to pursue other mechanisms to improve our profitability. And this has compensated in terms of production results, including cost reduction and restructured assets such as Chuí, generating much more value than what was expected in initial business plan. We're working with this security level with full service contracts. So we have low impact in terms of availability on our results, and also these initiatives to increase margins and new long-term contracts, which altogether allow us to have very consistent result levels. And we have also been diversifying our portfolio. Today we have Chuí and we have Goodnight, which in our consolidated wind portfolio help us decrease the effects of this higher natural variability of resources that we have in the Northeast. We have some very good years and then very poor years under P50, which is what we have been seeing in Assuruá and Delta in the past few years. So overall, we are certain that this regression to the average will take place, but diversification also helps us suffer less or have less volatility in our production for a specific year. And today, our uncertainty assessment in terms of standard deviation in our consolidated portfolio, including hydro and solar, is slightly above 5%, which for a renewable energy company is a very good number. This chart here is to confirm the evolution of the EBITDA of the company. We were close to 1.8 in the past 12 months, and our guidance was 2.3 billion. So it's slightly lower than what we had projected originally, which was 1.917, right? 917. So we look at the first half results, then we had a forecast of resources for the second half and prices, and then we decided to be very transparent as always and adjust the guidance for the year due to these elements that I just mentioned to you. Now, looking at new contracts in energy supply, we closed in the first half 130 megawatt average in long-term contracts, most of them close to 10 years in duration. And these new agreements signed this year, which should start being effective next year, some of them already start in the second half of this year, but most of them next year. These agreements have the potential to increase our EBITDA margin by 3 points due to these new agreements, which are better than the new agreements that we had previously. So it is hard work, but just like we said at the beginning, we can look at it from a half full glass perspective, creating more value to our business plan, or a half empty glass perspective, creating a security margin, which can compensate for lower resource years in our portfolio. We have been diligently pursuing the objective of becoming an energy supplier for the technology world, particularly in high-performance computing and artificial intelligence, large loads. In Brazil and in the US, we have a lot of conversations going on with potential clients. And about 1 month ago, we took a first step. Well, I wouldn't say a first step because we already had clients in this industry in data, but I would say we took a new step towards signing a new agreement to supply 20 megawatt average to a high performance computing operation in Assuruá. And we expect this to become something recurrent in the coming months. And we're very positive in terms of the partnerships that we can establish with technology companies as a new business front, which will be very useful to us, not just to improve the profitability of our current assets, but also to allow for new investments. Goodnight 2, for example, has a great chance of supplying energy to the technology world. Now, in respect to the margin, I need to talk to Andrea about Goodnight. First of all, today, we have very good prospects that this boom in the demand for new energy, particularly from technology clients, will help us achieve better long-term prices, not just for net 2, but also for net 1, which can benefit from the favorable prices in Texas. Today, we have our operational project, which can, in the long term, be very favorable. We have 2 which are yet to be launched, which should be launched with a long-term contract at a very satisfactory price level to create value to our business case. And today we have approximately another 800 megawatt being developed in the region. And this new potential new capacity can be directed at important verticals which show a large appetite for renewable energy. So we're very positive about this new work front in renewable energy in Texas, which will allow for new initiatives and will also help us maximize the profitability of our operations. Our other work front relative to Goodnight, we have seen good advancements in the attraction of a consortium for Goodnight. And we believe that in the second half, we will be able to consolidate this operation under a model in which Net 1 and Net 2 will be under a holding. Goodnight 1 and Goodnight 2 will be under a holding, and we will have a new partner, which will hold a minority stake, and this new capital will be used for investments in phase 2. And what is the timeline? What is the time frame we expect? Well, today we are conducting the competitive process and the due diligence, and in the next few months we will reach the final stage. So I'd say that by the end of the year, we expect to have good news to share with you. We have received formally and in writing, we have received 7 proposals, and today we have we're left with 3 proposals that we're still analyzing, and we should make a decision in Q3. But we already selected those who were more in line with what we need, and we are now in deal mode to try to complete this operation. And as soon as we have news to share, we will let you know. Andrea, would you like to talk now about our financing plan? I think there are some important points. One is the prolonging of our dollar baseline. Yes, everything is going according to what was planned. I think the news here is that we have reduced our net debt over EBITDA ratio. In Q1, it was 5 times, and now it's 4.8 times. And as you heard from Antonio, we had maturations now in August, and we were able to postpone that in 2 years to have time to make a decision about capitalization or sell down for Serena Power. Yes, the conclusion of that investment in the primary, in the holding, will impact the real need we have for financing looking forward. We were able to extend that to have time. This will give us time so that we can make the right decision when the time comes. Whether we will continue with a very attractive cost. We're talking about 8.8% nominal in reals and more than 5-year maturation for our debt. And Andrea, in the past few months, we have been looking at the possibility of having a greater exposure to dollar-based financing. So what is the rationale for that? Not just for Goodnight, but we are also closing some PPAs in Brazil, dollar-linked. And of course, this opens up a new front to us. We have been coming across some very interesting opportunities of dollar-based financing lines, very competitive, and we see potential savings in expenses with interest that can go from 10 to 15%. So compared with the Brazilian real based lines, this is very competitive. And also we're looking carefully at the possibility of pursuing this in the next months. Yes, it's an opportunity in terms of diversification and value creation.